And that sound means that we are live here on YouTube. Tackle Trading's halftime report, 1/14/2019. We've got Coach Matt, we've got Coach Tim, we've got Coach Cody, who did a great job on this weekend's newsletter. Cody, by the way.
Thank you.
Fantastic job. Matt, how you doing this morning?
Doing really good, Tim. Excited to be here with the crew.
I'm fired up. Let's rock and roll. Finally, some market action to the downside. We've been waiting for some of this pattern to develop. It's not all the way there. There are some stocks triggering. I think you're really moving into a stock pickers kind of environment. You had mentioned PCG is going through bankruptcy, Matt. We talked about how and it's one of the first stocks I want to talk about before we dive into anything else. We've said this over and over and over and over again for the last 3 months, and we're going to become a broken record if you listen to us long enough, because some lessons you can't say enough. When something's untradeable, it's untradeable. There's a reason, right? And bankruptcy filing here today. I didn't dig into the entire news map, but the stock's down 40%. What's your read?
After that first initial wildfire, and we started seeing this, and this was basically a repeat of what we saw last year. We saw the same thing with PCG last year, Tim. I mean, this isn't the first time PCG has went through this. They went through this in 2018 as well. And after that, we called it untouchable because it was. Mm-hmm. It was, especially once we started seeing reports that PCG might be complicit, maybe not complicit is the word, but liable for I can't remember what forest fire it was, but there was reports that they were liable for some of the damage or the creation of some of the forest fires, and it's coming out, and they're filing Chapter 11 bankruptcy, and it's down 46% overnight, and you should never have been in this after the first one. I don't understand what, and especially like I heard a report that came out that said about a month ago the PCG said they were not facing bankruptcy, and a whole bunch of people started buying a lot of stock, and it's just like, oh no.
Well, sometimes investors like fanboys of football teams live in the past, and they keep bringing up the fact that in 1973, the Miami Dolphins were undefeated. I get it. Like, you get pulled into the past.
You really want to go there?
Well, it wasn't me who brought it up. I mean, Cody put it in the prep today.
I'm just saying that on this day in 1973, the first and only undefeated champion of the NFL was the Miami Dolphins. And here's what Cody says. Hey, Matt, was that the year you started being a Dolphin fan?
Yeah, I'm that old, dude.
And that's actually how he responded. He's like, how old do you think I am? And I was like, wait, you're like 40, right?
Cody, I wasn't around back there, buddy.
He was not even a twinkle in our father's eye at that point.
No. My father was thinking about it, but he wasn't doing it yet.
No.
It was interesting, Cody. So thank you for that reminder that I am much, much, much older than you. On this day, Miami Dolphins. So yes, you can take your little negative comment, Tim, and I'm going to stay on that because that's the only thing Miami Dolphin fans have to hang their hat on.
Matt, I'm a pillar of positivity. In fact, nothing but optimism here today. And we're going to go out. We're going to change some lives. Over time, all you can do is try to get better on a day-by-day basis. I was having this conversation with a student via email this morning, a couple of back and forths, and I basically told him it's okay to go back to some of the more beginner concepts. He was showing some frustration that even though he has some really good rules on advanced spreads, Matt, he didn't really have his swing trading rules down. And he's like, well, maybe I've made some mistakes here and I'm getting kind of frustrated by that. I'm like, no. You can constantly and forever work on the most important fundamentals, and that's where daily routine, top-down analysis, basic chart reading come in. There's no doubt.
Tim, I've said this a lot of times in my life. Traders try to make things too complicated as they get a little bit more experience.
Yeah.
And they start learning these advanced techniques. And, I remember I've been a mentor for a very long time, an educator for a very long time. And I've seen so many situations where you have a good trader, right? A good trader with a good simple system, but then they learn, oh, I can do a back ratio spread. So let's go do some back ratio spreads. Let's sell some things to buy some things. And they start doing that. And they're like, oh, that is really, really cool. And they get so sucked into the concept that they don't understand that sometimes simple is just better. And then you start seeing people do advanced hedging techniques. And it's like, you just need to learn how to take a loss sometimes.
Yeah.
You know what I mean?
Yeah.
Don't try to make this overcomplicated. I mean, as a trader, we're going to go trade some directional stuff, but remember Warren Buffett. Warren Buffett didn't go out there and make a career by doing advanced six-legged option spreads. Warren Buffett bought good stocks, fundamentally great stocks, valued stocks. He rented those out and covered calls. He compounded the gains, and that's how he became rich.
I love having the ability to do it, but I'm much more grateful in having the clarity and the wisdom to not use advanced techniques when I don't have to. Just keep it simple most of the time. I love, personally as an expert, I love having the ability to do it, Matt, but this over time. Most of the time, you should just take a hit, get a stop, move on, take the loss, journal it, and go find another trade. You don't have to fix everything. I think people.
Well, and if one trade goes against you, Tim, you don't have to change your entire system and look for different systems. You just got to, focus on what you did right and what you did wrong, journal the trades and move forward. I mean, how many different option strategies are there?
Oh, countless, hundreds, literally.
There's countless. I think the Chicago Board of Options Exchange recognizes about 22, right? Uh-huh. But Tim, how many do traders just create?
They have an official designation list. Is that right?
I saw this like 5 years ago.
I'd have to take a look. Yeah,
been updated since, but yeah, it's like 5 years ago. They had like 21 or 22 like official option strategies. But Tim, there's hundreds of option strategies. I mean, a lot of times traders will just go click on stuff on a risk graph to find a risk graph they're comfortable with.
That's right.
I mean, so we can get a little too advanced sometimes, I think. But at the end of the day, you have your core systems and you have your non-core systems, and you got to figure out who you are as a trader over time. My core systems, I still like directional swing trading. I like covered calls. I like naked puts. When the technical and economic conditions are correct, I like iron condors, but I don't do them every month. So, you got your core and you got your non-core.
For sure. Yeah. Portfolio design is critical. I'm looking at this V-shaped pattern here on the graph, Matt. We had that in the daily email today. It's a very common pattern in the market. Top 5 headlines today, according to investing.com, China's exports shrink most in 2 years. Futures were down on that news. We're kicking off earnings season. They have Citigroup kicking off earnings season, but it really is the entire banks this whole week,
Just
Matt.
The banks.
Yeah.
Citigroup came out today with earnings right before the market happened, and it's pulling up the financial sector. Earlier, just a little bit ago, still the case. Financial sector is the only sector that is actually technically in going up today. The other sectors are all down today. Also breaking out of a little bit of a base here, Tim. You should expect the financial sector technically to appreciate kind of into this 25 level before it has another resistance level to really kind of handle. So positive news coming out of Citibank, positive news to start off a very, very important week of earnings, Tim. I mean, how many different banks or brokers are reporting earnings this week?
Oh, there's quite a few. Yeah. I mean, I was looking at a tweet that came out from a guy, Jesse Cohen, and Morgan Stanley, American Express, all the financial stocks. They're all Goldman Sachs, BlackRock Financial, Bank of America. You even do have the Alcoas and the U.S. Bank Corps and the PNCs, and there's a bunch of other companies that do
as well.
Delta tomorrow, United tomorrow as well. It is the first week of earnings season, and it's going to be on our conversations each and every day as we have the halftime report. How companies react to earnings, we'll wait and see. Citigroup here today, they beat earnings, missed revenue, right?
Yeah, they beat. You're going to see this, but in terms of earnings, and this is the one thing I'm really interested with earnings this week with the financial sector. A lot of these companies do as much business outside of the U.S. as they do within the U.S. And it takes Citigroup, for example. Citigroup does more revenue outside the U.S. than they do in the U.S., and that's pretty common with a lot of these banking stocks. And with the name of the game, especially coming out again, China today announces, a little bit of a slowing growth with their trade balance dropping, first time in the last couple of years. So in terms of that, we're going to get a lot of more information regarding the growth of the international with these banking earnings. So it's going to be interesting to see that this week. That's what I'm focused on, though.
Give me FXI real quick, if you would. In fact, let's talk about that Chinese data. We're seeing reports out of China over and over and over again that they're having some slowdown in growth, Matt, but I'm not seeing it in the chart necessarily translate into selling. In fact, in my opinion, FXI has moved more neutral. I know it's below moving averages, but you now, for the first time in a while, have a pretty clear consolidation here over months.
That trade balance report last night was not bad.
No.
It was not a bad. It wasn't like, if you'll recall, what was it? 2 weeks ago, we got the manufacturing data out of China, which was in recessionary territory. Now that's a negative report. What we saw last night was just nothing. I didn't take it into heart very much at all.
Mm-hmm. Is China an opportunity here in the first quarter if we're getting through some of the big earnings?
Not yet, but you can see it technically slowing down. I mean, you can see double bottoms here. You still got a little bit of a downward movement in terms of the overall resistance level, especially if you take out that fake out we had right there. But the double bottom does give you a little bit of hope for China right now. And if we do see some positive news coming out of the trade deals between China and the U.S., China will catch up. China will catch up. Now, give me the S&P above China all the time, but there are moments in time where you say, okay, this looks like something that's undervalued, and it might be an opportunity for such of a position trade or something along those lines. But I wouldn't do that until we start seeing breakouts on the weekly chart, Tim, and we just haven't seen that. So in terms of this, yeah, you are slowing down tremendously here. You're double bottoming, but you still have decreasing resistance levels, which has to put you more in the neutral to slightly bearish territory, with a little bit of hope that we start to see resistance break out. If resistance is broken, and you can look at that resistance level on a couple different angles here, but if you look at that being the overall resistance right in there, right about 43.5, yeah, if you take out that level, yeah, I think it's go time.
Yeah. I'm interested in some of these companies, I think, is what it comes down to. Baba is a company that we've had on the Tackle 25 in the past. I like the company. I'm looking for those signals.
Baba, I mean, a lot of those Chinese tech, I mean, they got slaughtered in 2018. And yeah, they have a lot of room to come back. Those companies, Tencent and Baba, those are great fundamental companies, Tim. Great companies.
100%. Yeah, they are good companies, and I'm waiting for those signals.
I will say this about FXI, and this might not make a lot of sense to new traders. I would much rather buy FXI at 44 than 40.
Yeah, I agree. I mean, that whole idea of buy low, sell high. I'd rather buy higher and sell higher. You get confirmation on a breakout, you have momentum, you have a trend developing, and that would be a clear signal. And you would clear the 200 period moving average and all the different MAs. That'd be a wonderful signal. There's no doubt about it. We'll have to debate this China-US thing again and kind of talk about some of that pattern. Give me back to the ES if you would. And the number one loser on the S&P here today is that PCG stock, obviously, like we talked about. But real resiliency, Matt, the headlines were worse this morning than the action is here today. You've got a tiny range candle.
How long before the S&P kicks out PCG?
That's a good question. I don't think it would take too long.
It's not going to take too long.
Tomorrow.
No. It's not going to take long. That thing is a dog, and they'll remove it. They'll remove it from the index.
I got a question for you. What is our official hashtag? Is it HTC halftime?
Our official hashtag is Team Tackle.
Team Tackle.
Yeah.
Hashtag Team Tackle.
Hashtag is Team Tackle, and then you also have hashtag HTC halftime crew.
Because I was trying to repost and get the word out on our halftime report this morning as we're starting the week and getting excited. And I've seen the hashtags come in a few different ways. I love the HTC one, but I think Team Tackle, guys, is what we're using. Is that right?
Hashtag Team Tackle is what we're using on Twitter as the official. What is there an official hashtag?
I don't know. We can do both.
I don't know if I've ever heard. Okay, this is our this is our logo. This is our motto. And this is now our official hashtag. I mean,
this is my rifle. This is my gun.
Yeah, welcome to 2019.
You made me think of the old sergeant from, what was that show from the 80s?
Are you talking about Full Metal Jacket?
Yeah, that's damn right what I'm talking about.
Hey, listen. I don't know what that says about me that I got Full Metal Jacket on. This is my gun. Yeah, I got it. Full Metal Jacket. There you go.
First half of that movie is the best war movie of all time, my opinion. Second half is okay, but it doesn't make it.
Movies though, bro.
Apocalypse Now is maybe my favorite as well. A lot of really good ones. We'll have to have that discussion.
The 1980s has some great war movies. Great Vietnam. Now the late 70s and 80s.
That's right. One of the things I did see here today from some of these S&P 500 stocks is obviously you're going to have the earnings at a Citigroup that's going to dominate the headline. In fact, give me that chart real quick, Matt, if you would see. And Monday is where we do our full market prep day. Earnings reaction, rally right into old support. It's almost like the XLF pattern identically, Matt. You know,
Well,
if you look at that.
it is, but it's obviously showing strength versus the actual, XLF. So you're showing strength there, Tim, and you can't deny the bank a good start to the banks. It's a good start to the banks.
Yeah. Yeah, it's a good start. We'll see if there's carry through. Citigroup, is this a more important company and a more important earnings to see this out of a bank, like a consumer type bank, or is it more important to see it out of the brokers, Matt, for you? Does it matter?
For me,
Yeah.
banks. For
Yeah.
me, it's the banks.
Yeah.
Brokers are second, banks are first.
Cody, make sure that you invite Coach Mark on Wednesday. I want to do a full breakdown of the financial sector earnings. I know he digs into a lot of the fundamentals on those releases as we go. Citigroup up here 4% today. Some of the other stocks rounding it off. Goodyear Tire up 2%. State Street up 2%, Ford Motor up 2.5%. That catches my eye. I do like Ford, but this has not been an investment type stock for a long time.
In the last couple of weeks, I think we should go build a portfolio around Ford, GM, and GE.
Damn. It's old school. It's 1985. We're talking about Full Metal Jacket and Ford and GE and GM.
Let's do it.
Yeah. Oh, these are not viable.
Isn't like the big car expo this week too? I don't know what it's called. I don't follow those.
I knew the electronics show was in Vegas this last weekend, and that's huge, but I don't know about the car expo one. Mm-mm.
Yeah, I think I saw it in passing that this is the week there, and I was like, this is what the new car is going to look like.
Mm-hmm. Mm-hmm.
I don't trade Ford, don't own Ford, don't trade GE, don't own GE, don't trade GM, don't own GM, and I never will.
Yeah, it would take a lot for me to want to buy one of these automakers. There's no doubt about it. Just don't see the chart or the profitability in the future here. Newmont Mining is down fairly big, Matt, and we love the mining stocks. When I see this, it's always going to grab my attention. Down 8% here today. Newmont to become the largest gold producer with a buy of Goldcore. Mergers in this sector, interesting.
Yeah, now you had to do it right when it was breaking back up above the 200-day moving average, guys. Come on, what are you doing? Give me a breakout, let it run a little bit, and then announce it as it's overvalued. Mm-hmm. So comes right back down to support. You just don't care about the traders, Newmont. But yeah, Newmont buying Goldcore in an all-stock deal for $10 billion. After we saw Barrick Gold and Rand Gold kind of merge, I think you could see this coming down the road a little bit with Newmont. Newmont's going to be the biggest gold mining company in the world now.
Mm-hmm. Western Digital WDC is also down about 6%. This stock has been on many of our reports for quite some time. Goldcore looks like gap up there. WDC, if you would, Matty.
Very quickly, and then I'll go to Western. This is what you see on mergers, though. Okay, the company that is acquiring, i.e., in this capacity, Newmont, they typically go down on the merger. And the company being acquired typically goes up on the merger. And that's what you saw with Goldcore. Now, as a trader, you're not looking to trade Newmont in any capacity. But if you're looking at it from an investor perspective, I wouldn't freak out about this movement. Let it slow down. Let's give the market a little bit of time on the merger.
Yeah. What's going on with these chip makers, Matt? WDC down 6%. I'm seeing some weakness in this downgrades. I'm trying to find the news. I mean, they don't have
WDC got downgraded.
I see.
So that's what happened with WDC. I also believe Delta got downgraded today. So Delta got downgraded from a buy to a hold. It's down a little bit, down 2.29% today. PG&E, PCG down 46% today based on the Chapter 11 bankruptcy in California. Delta downgraded today. Newmont and Goldcore obviously have their merger, and Newmont down today. Lulu, another stock in the headlines, Tim, got upgraded today, actually. Lululemon. Is that a buyable signal right there on Lulu? Obviously, volatile candle, but
yes, it is. You'd have to play it with a spread or a hedge. It's not complete perfect confirmation, but you had a pivot about 5 candles ago, Matt. See, one of the hard things when you're reading pivots like this, I love the intraday action, rally, pull back, the whole thing. Yeah, it is.
This. Okay. This is the news. Sets a higher high intraday, retracement down intraday, following its momentum. You start to see going back up above those highs of these candles. And yeah, that's tradable right there.
Yeah. And guys, you're going to hear me be a broken record about this all week. We got 61 people here live. Welcome, Halftime Crew. Great to have you. Give me those thumbs up on the chat. We always like to aim for at least a 50-50 mark, Matt. I think is that like par for the course, usually about half.
I think you've made up that metric. So
hey, it's higher than what the number is.
I like it. Good metric.
It's like a corporate earnings. I mean, I'm just going to set the bar where we can exceed it, right? And then we all feel great. I like it. Yeah, no, obviously just appreciate getting the thumbs up, get the word out there for the company. Apple Computer, bear retracement pivot, Matt. I love the company from this entire year perspective. At some point, I think it will be buyable. There's no doubt about it. Cash reserves, product, leadership, you name it, a bunch of different reasons. But that's a bear retracement and a trigger, Matt, on the bear option report this week as well.
Yeah. No, it's bear. It's triggered. Apple also had negative news today coming out of China.
Speaking of Apple, one of the bigger Dow components.
It wasn't China. Apple had some negative news because of one of their chip makers coming back to your chip maker. What's going on with the chip makers out of Germany?
Yep. And look at this, Matt. We exactly went to 50% of the thumbs up right away. You see that?
Listen, Tim, it's called the Fibonacci retracement.
Stop it right now. Oh, I am not going to be trolled.
Yes. Oh, that was such a win for Matt. I got to give that to him. Oh, that was perfect timing, Matt, on that one.
Fantastic. All right, move on to the Dow Jones Industrial. Apple's a component on the Dow. We do a full market breakdown on Mondays. There's no doubt about it. We like going through step by step. YM contract, no different than the ES on the pattern perspective, Matt. Old support, new resistance, small range candle today. Top gainers are going to be financials because Citigroup news. JP Morgan, Goldman Sachs lead the way. What's your read on the Dow here?
My read is coming back to what I read in Zero Hedge about a week ago. Is it the Powell put or is it the Powell call? Did they sell a call? Did the Fed sell a call at 2,600? Did the Fed sell a call at 24,000?
Well, here's what happens. I think it's the Powell call and the Buffett naked put.
It's the Buffett put and the Powell call.
Yep.
All right, let's go make up some other stuff.
Well, I do know in 2008, Warren Buffett took a huge position out naked put against the SPX. He was willing to buy the market. In fact, he put a floor in some level. He kept going on CNBC every day.
Bank of America and all the banks came up and begged him to buy their stock and give him a 10% dividend. And the market cheats with Buffett.
Yeah, they sure do. I mean, this Dow here is no different than that ES contract, in my opinion. I'm looking across.
Look at this, Tim. And the last 4 days. Look at the last 4 days on this 30-minute chart. I don't understand how people in the market say technical analysis, and that's not a lot of people, but there are people in the market, especially Wall Street and fundamentalists and money managers and they're your financial type guys and gals and whatnot. They might say technical analysis doesn't work, but 24,000 to me is such an obvious resistance zone. It's such an obvious resistance zone. And anything above 24,000 is buyable. It is. It's the same thing with 2,600 on the S&P, right? If it doesn't hold and confirms, we have great shorting opportunities. There's some great shorting opportunities in those scatter reports this week. Just wait for the market to trigger. That's all I'm going to say. Just wait for this market to get underneath those levels. It's just going to take 1 day. Don't be early on this.
Yeah.
Wait for it.
Well, I have to remind myself every day to stay open-minded, stay zen, because Matt, if it does rally and break out, I got to play it that way. I'm looking for the trigger. Don't get me wrong. I think the bear retracement is the better setup. And in the newsletter, as coaches, we all kind of came to a consensus that the market is still slightly bearish, but we've been moving more into that neutral range, Matt. I'm looking at the Dow performance year to date. There's only 3 companies that are down out of the 30 companies that are down more than 1% this year since Jan 1. Now, the market's been going back up, V-shaped recovery, right? But we are seeing some strength. It looked like it wanted to trigger today, but early in the morning on a Monday morning is not exactly confirmation when you're on light volume, right?
Listen, triggering is not the futures market overnight on a Sunday, Tim. That's not confirmation. We've seen it over and over and over again. Market sells off a little bit overnight. Negative news coming out of international, and then when the cash open happens in New York at 9:30 a.m. Eastern Standard Time, what does the market do? Well, if you look at it on a 15-minute chart, here is the overnight action. Let's highlight that. Here's the overnight action coming out of the futures market that opened up on Sunday. Here's the Chinese data. Here's the cash open, Tim. right there.
Mm-hmm.
I mean, immediately upon the cash open, boom, it goes up. You look at it last week. Here's the overnight. There's the cash open right there. We've seen it over and over again. So until for me, the future's going down a little bit overnight is not confirmation. I got to see this market close underneath during the cash.
Interesting on the tech side. Move on to the NASDAQ if you would. I saw that Activision was on the positive side and Take-Two was on the negative side. Usually the gaming stocks move in unison. We are giving them a lot of play lately. They have been in the news, obviously. Activision over the weekend, and we talked about it last week, how they, dumped the relationship. They didn't dump it. Bungie did dump the relationship with ATVI.
They got the dumped. They're trying to say it's a mutual, right?
Yeah.
But they got left at the altar on this one.
They sure did. But it's back up here today, trying to recover some of that gap, just gap behavior. Yeah, I have concern about them losing one of their obviously number one relationships and affiliates. That's $1 billion relationship plus, Matt, obviously. So yeah, I mean, I have concern about that. I like the gaming sector potentially this year at some point. That's not good price action, obviously, on a gap down.
Even with that, though, look at what's happening, though, T, on the weekly. Even with that negative news on over the course of the last, I believe it came out last Thursday, coming into Friday. We're still hovering here. That's forming a little bit of consolidation right there. You certainly could break that 43, and you could probably give it a 44.5 to right about a 44 level of support. You got overhead resistance right here at about 51.5 to 52. If it breaks back above that, that is absolutely viable. If it breaks down, it's absolutely shortable. What is not is tradable in that range. Wait till it breaks the range.
One stock really flying today is Wynn Casinos and Resorts, WYNN. We had a debate on the podcast. I like this company, Matt, from a long-term perspective. You guys asked me which one of these high flyers you would pick for a 10-year window. And I like the casinos, Wynn, Las Vegas, because eventually they will come back. I know that's not a mindset I usually like to promote, but it is true. They have real estate holdings. Gambling's not going away. It's been around since the dawn of time. That's a W pattern. I would love to see some breakouts. You got earnings coming up here, though, down 4% today.
It's got to close above 120, and that's confirmation on a W reversal.
Yeah, I'm watching them in the first quarter.
I actually like this movement. If you're looking to buy Activision, I like this movement. I do. I don't like, and I'm a broken record on this one. And I mean, even Mark in the Scout Report meeting on Friday, we were looking at some stock, and Mark's like, I know Matt doesn't like long breakouts. And what he was meaning by that is this stock running from all the way at support to all the way at resistance. And then what are we really going to say, that it's just going to continue to run? Like people aren't going to get tired? No, people get tired. And so it retraces back down, and then you have a shorter distance to run into the breakout, which means you have more range for it to keep on going up. So I actually like that. I'm not looking to trade it within the neutrality, but if you're looking at eventually breaking out of 120 and buying this is what you want to see. You want to see it come back down into those moving averages. You want to see it pivot at those moving averages. That will give it a lot of strength coming into that 120 breakout.
We're going to need to see tech leadership for this market to really run, in my opinion. All these different ones we're talking about, Wynn, China, all of it. I think we're going to have to see stocks like Facebook break 150 and run as well. I'm looking at the fangs here, Matt. Facebook's up a hair today. Amazon is flat, but they're all showing subtle reversal signals. Netflix broke out and took off. Google's neutral in a range. Apple's been bearish, and I actually think is heading lower, worst performer on the Dow. There's mixed signals in tech. It is definitely not decided yet, and we're moving into earnings season with the NASDAQ and tech. Wynn is on the NASDAQ 100 here, kind of looking them all together.
Let me respond to a question in the chat real quick, Tim.
Yep.
Pepe says, agree with you guys that technically there's no confirmation on either side, and he was talking about the S&P and the Dow when we were looking at that. But wouldn't you agree that the economic signs around the globe do indicate a clear roadmap towards a probable breakdown? Pepe, let me say this very, very clear. The warning signs about economic growth around the world are obvious. They are obvious. The Fed has been tightening for the last 2 years and been very aggressive in 2018 in their tightening schedule. That's another thing. You have the Chinese situation between trade with the U.S. You have geopolitical situations. You have a debt crisis in in Italy right now. You have a European debt crisis. You have Mario Draghi giving a speech and he doesn't even know what he's talking about these days. You have a Brexit vote tomorrow that is extremely important. And we've had sign after sign after sign after sign coming from economics or coming from earnings reports or coming from pre-announcements on slowing growth around the globe. All of these lead to a conclusion that the market does in fact go down. But the market doesn't have to trade in line with what the economics are. You have other factors that impact price action, such as central banks. And the central bank is the most important in this situation. And Pepe, I agree with you on Germany as well. If Tim asked me to buy Euro FXE, I would say no. They have massive problems over there. But again, the market doesn't have to perform identical to what we see in the economy. The market is forward projecting, the economy is backward projecting, and then you have the Fed coming out with the plunge protection team from 2 weeks ago, bringing the price back up into resistance. So a lot of what we're seeing in the market is manipulation. That is what we're seeing in the market, but we can't trade with what our heart tells us. We can't trade with what our mind tells us. And I know that's weird. We have to trade with what our eyes show us. And so economically, yes, am I prepared for something major? Yes, I am prepared for that. Absolutely, no doubt about that. Would I be surprised to see 40% down, from an economic standpoint over the course of the next year to 18 months? No, that would not surprise me in any capacity. But as long as the Fed is trying to put a bottom in, and as long as the Fed is trying to control price action, we're going to see this manipulation. And I'm not going to get on a soapbox because I hate the manipulation. It drives me absolutely nuts. I am an old school capitalist that believes in supply and demand and believes that a free market is the best market for all market participants and not just a select few market participants, i.e. Wall Street corporations and the big banks. I think the stock market was created for all of us and not just for that select few. And with the Fed doing what they do with monetary policy, especially in the last couple of weeks, that has signaled to me that the Fed is capitulating to Wall Street, to corporations, and to politics who do not want to see a true market response to the economic condition that we are seeing. So yes, we have some manipulation. Yes, am I prepared to see the market go down? Of course I am. But I got to trade what I see. I have to trade what I see.
So much of this quarter is going to be that slowing global growth theme, and whether or not that does confirm or not and ends up making the market sell, that's what we're going to trade what we see as we go. By the way, Matt, I met Pepe down in Mexico City. It's great to see your name, Pepe. Yeah, it's what an amazing...
Tim, it's something that will confuse everybody as new traders go. It will. But Tim, do you remember 2015 when Janet Yellen started the initial coming off of quantitative easing, like coming off that QE infinity, and we started seeing the tapering in 2014, coming into 2015, and we saw that first rate hike in December of 2015, right?
Sure.
And ever since Janet Yellen signaled that one rate hike, yes, Janet, thank you for giving us one rate hike, but ever since then, you remember 2015 coming into 2016, it was almost like the entire stock market wanted negative news to the economy. They wanted negative news to the economy to come out because every time negative news came out, the market went up. Every single time, Tim. Every single time, because that signal to the market that Janet Yellen, who was so obviously driven by Wall Street, it's a joke, that she was not going to raise interest rates. And if she was not going to raise interest rates, the free money party that the market had been loving from 2009 through 2015, that was signal like, we're going to get more free money. And I'll say this very, very clear. I hear from the conservative right all the time about socialism in America. And you know what? They're right. We do have socialism in America. We bail out publicly traded companies all the time. We gift billions and billions and billions of dollars to Wall Street all the time. We had a negative interest rate impacted because of quantitative easing. We printed $4.5 trillion and gifted it to the very top of the market. So when the right sits there and cries about socialism, they need to look at Wall Street and corporate America because they take more handouts than any entity in American history.
Oh, let's not get pulled into socialism, capitalism, and Marxism, because I think I could go off on that today. And I do want to have that conversation.
That was a great question.
Well, first of all, I'll introduce you to Pepe at some point. I think we'll have him on the podcast. He's actually a trained economist, Matt. He's got a background in economics. Yep.
It makes no sense when you're looking at price compared to economics.
Yep.
Unless you understand trading philosophy.
Yep. Yep. The thing about the Brexit vote, I will say this, because I did see that he had mentioned that as well. That is a real risk, obviously. And I still, if you listen to our prediction podcast, I do see lower prices through the year at some point. But guys, as a trader and investor,
it's a big deal tomorrow, Tim.
It is. It's a big deal. It's a big deal. What do you expect out of it, Matt, if anything?
I expect the vote to get rejected.
Yeah.
I expect the vote to get rejected, and then it is anybody's guess. Does Theresa May resign? Does the Labour Party come in? Does the Conservative Party remove Theresa May and bring in somebody else? Do we have a hard Brexit on the 29th? Do we have an extended, negotiated to extend the deal? But Tim, I do expect that vote to get rejected, and then I don't know. I will tell you about the pound. If the vote is rejected and Theresa May is removed, and you start to see the Labour Party come in, the pound will get crushed in that. Mm-hmm. But if they do postpone, if they negotiate with the EU to postpone, to give the politicians a little bit more time to negotiate the Brexit deal and maybe convince some of the Labour Party, pound most likely will appreciate just a little bit.
Because of the sensitivity of what it does to the pound, and the pound being in the top 5 currencies in the world, Matt, of importance, could you hold any short-term currency trade into this vote? I mean, or would you pull out of almost anything?
Not one that includes the pound.
Yeah.
No, I said that in the Forex report. I said tackle traders going to be very cautious about this. They're not going to jump the gun. They're not going to jump in front of a major situation like the Brexit vote tomorrow. And no, I would stay away from every currency that has anything to do with the pound until we see some degree of certainty coming out of that election tomorrow.
Quick peek at RTY, then the $ index. I will just mention cryptocurrencies are on the rise here as well today. Kind of some interesting neutral price action over time. RTY here, same pattern, V-shaped recovery, old support, new resistance, doji candle. Move on to the $DXY, if you would. Let's talk currencies here and just kind of generally look at it.
The market, though, is forming the same pattern.
A lot of it, yeah, in stocks, yeah.
Literally 9 out of the 11 sectors are forming the exact same pattern as the S&P. Mm-hmm. Some sectors are outperforming it. Some sectors are underperforming it. And, Cody detailed that in the newsletter from this past weekend, but they're all doing the same thing. They're waiting for the market to pick a direction.
Mm-hmm. Yeah, for sure. And this is where in a market like this, Matt, it's a reminder when everything in the stock market's kind of doing the same thing, you got to go down to a stock picker's market, top-down analysis, right? But then there's always opportunity in other markets as you're working through the market. Could be currencies, could be commodities, could be both, could be a lot of different things. But that's why we have a process where we start at the top and work our way down, definitely on a day-by-day basis. RTY, I'm waiting, just like everything else. We're waiting for confirmation one way or the other. Yeah,
we're all waiting on, and we're not waiting on economics, Tim. We're not waiting on a major economic report. We're not waiting on the Fed. We're waiting on the market to either break that 2,600 in the S&P or the 24,000 in the Dow, or we're waiting for a confirmation on the downside. And once we get it, we're going to hit it. But we're not there right now.
Yep. Of all of the different currency pairs that I'm looking at on a daily basis, one of the bigger movements actually on the dollar Swiss franc selling against the Swissy here today. Swiss is showing strength. The dollar yen is fading. The euro yen is also fading. You're getting some interesting action. The dollar's moved more bearish. I'm actually becoming more bearish over time with this pattern here, Matt, on the overall dollar index. Where do we have that in the yard mark?
Most bearish in the scanner report this past Friday.
I think I had -40. Yeah,
I had like a -20.
Yeah.
I think we ended up putting it somewhere around -35, though slightly bearish. Mm-hmm. And that's because we thought it could get into 96 before it comes and confirms back down. But hey, I got the dollar in a short-term downtrend, Tim, and nothing major from a weekly chart, or I'm not expecting a fundamental breakdown here. In fact, in the Forex report, I said that you can't deny the dollar's strength fundamentally. You can't deny that. The US dollar, if you had to pick any currency in the world right now, and you had to own that currency for the next 10 years, Tim, doesn't the currency have to be the dollar? Even in the face of all the trade deals with China.
If you're looking for safety, yes. I mean, if you were speculating in currency, you might be able to come up with another argument.
But if you're okay, but I can buy the dollar and get 2.5% interest right now.
Yeah.
The U.S. economy is the best economy in my estimation. It's the best and safest economy in the world right now.
Mm-hmm.
So if I had to pick one currency, fundamentally it would be the dollar. But we're seeing a little bit of short-term, downward movement in price, and a lot of that is because of the Fed is coming off their more hawkish stance to more dovish stance.
Mm-hmm. Yeah. The only reason why I'm still subtly not as bearish as others, and I have moved into the bearish camp on the dollar, is that I still think the Fed is full of it. And I think that Jerome Powell actually wants to raise rates 3 times this year. So
I know you think he's lying to Wall Street.
I do.
I know. And there could be some of that.
I think he's doing what he has to right now to get people to calm down and just get back to normalcy.
It's not helping though, Jim.
I know.
It's not helping. It's like I told my daughter last night. My daughter's trying to make a decision about what high school she's going to go to. And she's currently going to this dance academy that she has a very long commute at, right? And last week we talked about it for the first time, and I didn't want to tell her what she should do. I want her to come to that conclusion logically. And so last night I finally just said, Moo, you've made your decision a week ago. You made it a week ago, and now you're just trying to figure out how to tell people, right? Just tell them, because this back and forth, this flip-flopping, that doesn't help. In fact, it hurts you. You're trying to appease certain people, and it's hurting that process. Make your decision, trust your decision, and people will move forward with you.
Mm-hmm. That sounds like a very familiar conversation you and I had.
Yeah, it's the same thing when you called me about school, and Cody was trying to say, Matt, I have this opportunity and I want to focus on being an entrepreneur and investor, but I'm also, a year and a half removed from getting this degree. And I said, Cody, to me, you've already made that decision. That's why you're calling me, right? You're just trying to figure out logically how to work it out with the people that don't support you, because I'm going to support you one way or the other, right?
Yep.
But the more you flip-flop, the harder it is for everybody to accept that. And that same thing can be said to Jerome Powell. Jerome Powell, you're trying to appease Wall Street. You're trying to appease politicians. But if you just stick to your plan, the market will respond to that. And it will be consistent in that. But the flip-flopping doesn't help anybody. And Jerome Powell's been a bigger flip-flopper than any politician over the course of the last 5 weeks.
Yeah, Mitt Romney's the famous flip-flopper. We've got him now in Utah. He flip-flopped from the East Coast to the mountain states here, Cody.
Doesn't matter. He's my senator.
Maybe a presidential run in 2020. We'll talk about him much more.
Not running in 2020.
He might be challenging Trump. You never know.
Not challenging Trump. He wants to be the face of the never Trumper Republican movement, but he's not challenging. Are you kidding me?
I just see GE flash up on my trending now. Give me a quick look at GE. What is going on with that stock? Whenever I see the symbol, I always got to look at it real quick. Starting to go back up, Matt. I don't care.
Really? Starting to? It's up a good 25% in the last 2 weeks there, bro.
Fundamental problems, could go bankrupt. There's no way I'm touching it.
No, I'm not forming a portfolio around GM, GE, and Ford. I was kidding earlier. But I do know that, and I don't know exactly what the news was, but there was some positive news coming out on GE today. They bought somebody for $1 billion, I think, or maybe I need to look
some
up
kind of acquisition. Yeah, I'll have to look into
some type of acquisition, but it was a positive headline. I know that.
Let's move on through the commodities here, Matt. Give me crude oil first, if you would. Crude's down on global growth concerns. Whenever there's issues about economics or slowing growth in China, crude ends up selling off. It's not really down a lot. Anything above 50, you can't trade this yet. In fact, we are now back in that range that we were stuck in November, when it was rattling between 50 and 54. We now have to trigger either above that pivot point for a breakout, Matt. 55 is where I would have it.
Yeah.
Or sell below 50. Until then, there's nothing here. This is the classic K trade, by the way.
Oh yeah, below 50, above 55. Yeah, mm-hmm. that is a classic K trade. It's when you're anticipating strong movement one way or the other on a breakout, right? You got an order to sell underneath 50, you got an order to buy above 55. I was asked a question by one of our great team members, community members, if this was an opportunity now that crude is kind of coming back into that neutrality, should we start selling naked puts again? And I want to get your take on that. I'll tell you my response, but I do want to get your take on that.
I would not sell against real pressure underneath 50. No, I would not. Now, if it was down at 42 and slowing momentum, could you justify selling naked puts to take ownership on USO? Yes, I could. Yes. But a trigger at 50, Matt, I think you've got at least $4 or $5 down. So I don't know why I would want to sell on that weakness. I would probably wait for some kind of momentum signal down on a double bottom or something like that.
Okay. My response is very simple. On USO, absolutely, if you're willing to take possession of oil. Right. So if I'm looking at USO here, T, and obviously we're going to be looking at a very similar pattern there. But when I'm looking at USO here, and let's say I want to take possession at $10, right? I would have no problem with somebody coming to the market and saying, you know what, let's go ahead and drop that down. Let's go ahead and sell a, 24 delta, $10 put option, get paid $20 to play, $20, you're looking at about a 14% ROI there projected. You take possession at $10, you start writing covered calls, you own it for a very long time. I have no problem with that. But if you're selling naked puts on crude oil right now, I think you're being too aggressive because you're not looking to take, it's such a different philosophy with those two trades, Tim. When you sell naked put on USO, you're willing to take possession of the shares, right? When you sell a naked put on crude oil, you're not willing to take possession of 55-gallon barrels of oil, right? And I say that jokingly, but you're not buying the shares in the futures market is my point. You're doing it for simple cash flow reasons. Well, if you see a breakdown out of 50, Tim, I don't care what delta you have, that's at risk. Even though you have support at 46 to 47, even though you have support at 42 to 43, even though you have support of 37, even though you can go all the way out to the market and sell, 5 delta contracts at $35 a barrel. To me, that's still not worth it because we know if the market breaks 50 on crude oil, your margin's going to expand ridiculous. You're going to show a loss. You're going to have emotional concerns. I just don't think that's worth it. I just don't. So what my response was I'm not going to sell a naked put until I see a breakout. I treat naked puts on crude oil like directional trades, Tim. That's how I treat them.
Yep.
On USO, you can do it to take possession. On crude oil, you got to treat it like a swing trade.
Move on to NG next, if you would. Cold weather, literally, this is the headline. I know we joke about it, Matt. Cold weather across the Northwest.
The sun's out. Hold on. There's no clouds in the sky, Tim. It's a beautiful, beautiful sunny day in Utah. I haven't been outside. I don't know if it's cold.
I did the commodity report over the weekend. I called this one untradeable until we get much more clarity. I do like the potential for a breakout. I know that 3 was trying to find itself and hold. I thought that gap point would be another test, Matt. We blew right through this. This tells you why it's a very difficult one to play anything on.
By not selling naked calls.
Oh, you wouldn't do that again today?
No.
I mean, what if you can get the 5, Matt? You can get the 5 right now. I'll give you the 5 going once, going twice, go.
No.
6. I'll give you the 6. I'll give you the 6.
No.
We'll call it the 6. Okay. No, not going to do it. All right. You don't take naked leverage.
But okay, let me put it. This is how much I hate naked calls. I'm redoing the 7-step guide to trading for tackle trading. I've just cut the 4th video, so I got 3 more videos to go. And there's a slide in the 3rd video, in the 3rd module, where you're matching your bias to the appropriate strategy. Okay. And so you basically have your directional plays, your credit spreads. And on the left, it says, okay, if you are a -2, you can do a naked call. I had to re-record that thing a few times. Because I was like, no, you can't do a naked call. I know it says you can do a naked call, but you can't do a naked call because you're going to destroy your account. So no, no naked calls here, bro.
When I was looking up natural gas news and doing some analysis this morning, I saw a headline that just grabbed me and always is going to produce emotion with me because it's about the coal industry. And obviously where we're from, natural gas and coal are tied one in the other. Yeah, and in the first 2 years of President Trump's presidency, there have been more coal plants shut down than in the history of coal.
You're not changing that.
Nope.
I said it in 16, Tim. I said literally as I'm sitting down there camping with a bunch of those coal miners, bro, and I'm not kidding. Over the fire, I said, guys, I get it. You support Trump because you think he's going to bring back the coal. It's not going to happen. Economically, you can't.
It's not about politics. It's economic reality.
It's economics.
Yeah.
Economics.
Yeah, it's a tough one. Hopefully that natural gas industry down there, because, here's the thing about economics, Matt. We talk globally, but a lot of people live in local economies, that they are within that one
Tim,
region or area.
Without coal, the area that you and I have so many fond memories for, we like to make fun of it, but we grew up in Emory County, Utah. It's coal mining. It's a coal mining industry. I mean, our father had a small business, and the only reason he owned a small business was because of the coal mines.
Yep.
Right? Our grandfather worked in the mines for 35 years, bro. Died from black lung. Now, most of that was due to him smoking a couple packs a day for the last 40 years of his life. But, working in the coal mine didn't help. So we come from that industry. We come from that world. And it saddens me, but this isn't a political issue to me. This is an economic issue.
Yeah, it's a fascinating article. I'll have to send it over to you. It says President Trump can't stop U.S. coal plants from retiring, and that very well is the case. That's my opinion as well.
And he's tried.
He has tried.
Give Trump a lot of credit for that. He has tried. It's an economic factor we're seeing a fundamental change in energy.
Yeah.
Much like the steam engine, Tim. We evolve.
Gold and silver next, if we would. Let's move on to the metals market. I saw an email coming through our team account, Matt, one of our loyal halftime crew, Mickey, out there in New Jersey. He was wondering if he's missed silver. He felt like he missed it, and he wants to buy silver. And I'm like, well, and I haven't answered him yet. I just barely saw it before we started the halftime report.
Are we talking physical or paper?
Physical.
No, you can buy physical right now. Are you kidding me?
Yeah, I was going to say physical. Go to the store today. Go
buy some physical. Yeah. What are we swing trading the physical silver, Tim?
No, you're not.
Buy physical silver then.
Well, he's also said no. Now that I'm looking at the question, also in paper account as well. So he wants to trade the SL.
Never missed anything. You've never missed one trade in paper because if you missed it, you missed it in everything, right?
Right.
If you miss this trade, that's fine. Wait till the next trade. So yes, did you miss this run? Yes, that trade's over. We're waiting on a new trade, right? So learn from this missed breakout and don't miss this next breakout.
Sure, I agree. A break at 16 up here on silver would be trigger and tradable. Gold at 1,300, trigger and tradable. They're in the very similar
I honestly don't know which one is more obvious. The breakout, the trade above 1,300 on gold, or the trade above 2620 on the S&P. I like gold more, by the way. I'm just saying both. I mean, 1,300 is such an obvious resistance area.
Yeah. I mean, you break 1,300, you have clear sailing, Matt. You've got old resistance zones up in the 1,350, 1,380 zones and whatnot, but you've got a lot of upside there. There's no doubt.
If you'll recall, this was this 1,300 zone, neutral pattern we had over here. Remember when we had Pete Thomas on? It was like right into this area. And both of us said the same thing. You got to sell underneath 1,300 and you got to buy above 1,360. You get above 1,300, that target's got to be back up into that 1,360 range. It had so much evidence there.
Yep. Looking at the economic calendar for the week, there's stuff out of the G20 happening, mostly going to be earnings season news, Matt. Yeah, that G20 stuff, you never really know when you have those events. I always see them, I respect them, but you don't know what's going to come out of it,
It's not like a Fed announcement where I'm going to hold off certain trades, though. Right? I mean, I'm not going to get too caught up in the G20. I'm not expecting a lot of movement out of it.
My advice in the newsletter is don't expect anything from it unless we get like big news event, like Italy no longer wants to use Apple products or something like that. But other than that,
I don't think the Italians are going to say that in the G20.
That's just my random off the wall thought.
Well, Christian did tell me that.
Christian on this one.
My Italian friends over there, they hate Starbucks, is what he said. Starbucks. He did say that in a meeting. I'm not sure it's. Yeah, it's true. Matt, give me a quick rundown of all sectors. On Monday, we always do that. I know we're pressing up against time, but rapid fire through the 11XLs, if you would.
Yep.
Probably the fastest way to do it. Exactly right there in that newsletter, and go to the scoreboard where our football field is.
Right there.
Iron. Ding,
As you
ding,
see,
ding.
here is our gridiron. If I can get it to stay there. All right, S&P 500, we have ranked at a slightly bearish to neutral capacity right there at 40. That's because the S&P is right there at that 2,600 level. S&P, if it does confirm, obviously would be downgraded coming into the week. But when we're expecting a catalyst one way or the other, but the overall trend is down, like the S&P overall trend is down, but we're expecting a catalyst one way or the other, that typically will always be on that 40-yard line. And as you can see, Tim, almost every sector is right there in that capacity because they're all performing a little bit similar to that. We have the dollar ranked as slightly bearish, base materials is slightly bearish. And let me explain why materials versus, say, a communications, okay? So we gave communications a 45, we gave base materials a 35. 45 signifies neutrality. 35 signals slightly bearish, right? So I pulled this indicator before, but I want to add it real quick. Line, we're looking at the S&P 500 here. Okay. Now, if I run down through the sectors, look at basic materials here. So in the recovery, as you can see, base materials in the recovery has been very, very similar to that of the S&P 500 itself. When you look at it on communications has actually outperformed it to a certain degree against it. When you look at healthcare and utilities, for example, look at utilities here, Tim. The reason utilities, and I got to stop shifting the scale here so it stays. So let's go down it really quick. I'll look at all of them, okay? Look at financial here. The pink line, that is the S&P. The candlesticks is obviously your ETF, the XLF. So financial, for example, if we come to the new here, had a slightly bearish rating against the S&P at a 40, simply because in this recovery, it had not recovered to the similar capacity that the S&P 500. So basically, so financial over the course of the last couple of weeks simply has not performed as well as the broader market indexes. So when we saw that the sectors like financial, like basic materials, like consumer staples, you're seeing something very similar here. When we saw that in comparison to the S&P, all we did is just give them a slight downgrade versus the S&P. So if in this recovery over the last couple of weeks, you had materials, energy, finance, staples, all perform less in the recovery than some of the broader indexes did, those were all slightly left of that S&P 500 simply because of performance. Communications, real estate, utility, and consumer discretionary, as you can see here with consumer discretionary, has outperformed the recovery. As you can see here on healthcare, has outperformed the V-shaped recovery. As you can see on real estate, has outperformed it. So in the scoreboard, if you're reading this as the S&P looking all identical, and they do look all identical from a pattern perspective outside of utilities, Tim, if you look at them in comparison to the S&P 500, some of them had underperformed and some of them had overperformed. So when you're looking at the scoreboard in the Tackle newsletter from this week, that's just the difference here. So when materials, energy, finance, staples were all underperformed in this recovery versus communications, real estate, utilities, and discretionary that had all outperformed. And then you had industrials, technology, healthcare performing very, very similar to the S&P. So they're very similar ratings this week. There's no doubt, but there are some slight differences.
Definitely some subtle differences, and there's dynamic differences when you start breaking down chart by chart by chart by chart. I'll give you the communication sector right away, Matt. Facebook and Netflix are looking fairly strong, and even Twitter. XLC is starting to show me some recoveries. It was one of my dogs for a long time, but when you start breaking down the individual components, Facebook is showing me some reversal tendencies. Netflix has shown me leadership. Definitely some interesting stuff going on across.
Let's take a look at this, Tim. I mean, I know I hate this company because of data and them stealing our data, but you have obvious slowing momentum here. You have a double top here. You could buy that breakout.
Yeah.
I mean, yeah. Look at another one in that communication sector, Google. A little bullish retracement on Google, neutral pattern. Trigger above 1100. Yeah, you got the 200-day moving average, but you got reversal characteristics there. Looking at Netflix. What is it? Bird Box? Is it Bird Box?
Bird Dog? Bird Box.
Bird Box is the movie you're talking about.
I think we should call it Bird Dog. You can't deny Netflix strength ever since that came out.
Yeah.
More people watch that movie than watch Marvel movies.
Well, even that Christmas movie, I can't remember the name of it. I didn't see it, but it was, what was it? Not Michael Douglas, but the guy who played Wyatt Earp back in Tombstone. What's his name?
Oh my goodness. Kurt Russell.
Kurt Russell. Yeah. Kurt Russell did a Christmas movie, and literally he had more people watch it in his opening weekend on Netflix release than any of the movies he's ever done in his life.
Probably more than everybody that has watched Tombstone since Tombstone came out, Tim.
Netflix famously does not release data about their releases and all that kind of stuff.
They were not hesitant to release Bird Dog, though.
No, old Bird Dog. I like you're calling it Bird Dog.
I'm bringing out my Emory County roots there.
I wish I could do a Hank from that cartoon.
Get the Bird Dogs.
Oh, Bird Dog.
Bird Dog is. You haven't been in rural USA.
Oh, remind me after the show. I'm going to have to send you this letter I saw on Facebook. By the way, we're talking about the communication sector back in our old hometown. Yeah. A small business owner had sent a letter out to his people who shop at his store saying, hey, we're about to go out of business. We're going through bankruptcy potentially. We can't pay our bills and all that kind of stuff. And I read through it. And there's a lot to it. He runs a grocery store. A lot of it, he bought the grocery store after going through some difficult times in his life, and he thought maybe this is a great solution. He'd never been in the grocery business. He's facing challenges. Small business ownership and entrepreneurship is hard. And I will remind everybody out there, shop local, and support small businesses. I think it's important. If there's a business that you respect,
are the only capitalists left in America.
I agree with that. Yeah, it was just a reminder to me to get into these kind of stores and go and support the entrepreneurs that are out there hustling and working hard. Yeah.
Well, I'm going to say to the halftime crew as we end up this halftime show is this. You got a lot of bird dogs out there hunting for you some cans. Those bird dogs worked on Friday and Saturday to go put out some great scouting reports. You got your dogs hunting for you. Go use those reports this week, guys.
Now you just made me it reminded me. It's King of the Hill. The dog's name was Ladybird. I gotta find a clip or a meme or something.
Play that clip. Viacom already nailed this.
Yeah, that definitely will.
I don't know if the halftime crew knows this. We got flagged by Google by playing the South Park clip.
Yeah, we had the video taken down for about 12, 14 hours, something like that.
Yeah.
It's possible, Harold, that we are having senior moments here. At the end of the show, we definitely do get forgetful.
I'm 87 years old, Harold, so yes, maybe it is happening a little too soon. All right, guys, we're out. Thanks, guys. Got a heavy week over there at Tackle Trading. We have Coaches Show tomorrow, lounges throughout the week, Cash Flow Club on Thursday. Got the Friday reports. Saturday they come out there. And Tim, tomorrow?
A big one for tomorrow, though, Matt, because it's the first time our Traders Lounge is going to be student driven, and we're going to actually have some of our more veteran, students who are engaged in part of Team Tackle participate in a more direct way.
Guys, let's go give our love to the community stepping up to make those user driven Tuesday and Thursday Traders Lounges. So, podcast today. We're podcasting on the 7-step guide. So definitely check out that podcast later on today or tomorrow.
Oh, winner of the Twitter challenge, Adam Stewart.
Yeah, what do we got? Hold on. Hold on.
Sorry, I just saw Adam's name in the chat. Adam, you win.
Adam, you win. You win because of scarcity.
I think you won Twitter, just in general.
Twitter, I got to show a couple of them though, T. I got to show a couple of them. Okay.
If your halftime crew stay around for a minute, you are going to laugh your butt off on this one. There are several that really just made me,
Adam, I'm showing
enjoy my day.
Give my good friend and Adam a good little follow. He does a great job. Where are all your memes here, buddy?
He's so active. I put a post on our Facebook. You could look at all the pictures. Yeah.
There's a good one. He got Cody on Dallas Super Bowl pictures. That's a good one. Here's a good one. What Tim sees when he's daydreaming.
And GE logo just spinning.
Here's this one, us getting kicked off of YouTube, and it's gone. Oh, here's one. Coach No on the halftime report. I'm the cool dad. I love this one. Pro members come with what? Shut up and take my money. This is a great one with Bird Dog. Chairman Powell acting like the Fed doesn't care about the markets. Say one more joke about our kicker. He said that one to Tim on that.
That dude just...
he was just getting Tim. Are you?
That's the best kicker? One right there. By the way.
Are you a Bears kicker?
No. I love this one. I don't care what Matt says. I'm still checking the VIX.
Adam wins for the totality of all of them, but the very best one was Cody's.
He does. Cody
disqualified.
Cody is disqualified. He tried to give himself he was like the office manager who gave himself the employee of the month award. Brisket, by the way, Cody. Good job.
Thanks. It turned out well.
Yeah. I told you, Texas in Hawaii. Okay.
If you don't
tweets and replies, you should be able to get.
I love this one. Tim, the Dark Knight from Monty Python. They love me.
The one above it was
this is a good one too. Oh, I don't want to get banned. Where is that one? I gotta find that one. Oh, here it is. This one takes the cake. Let's move on to VIX. We don't need to look at the VIX. Just open the VIX. Mark it up. VIX down. It's part of our daily routine. That was
my favorite one. But Adam wins for sure. Adam did a great job.
Adam, you get to pick the topic that Tim is going to teach on Friday.
Yep, he sure does. Oh, Twitter is whatever you make it. It can be enjoyable. It can be great. It can pull you into stuff, arguments and debates. Make it your own. Follow the coaches at Tackle Trading. That's what I would start with.
Give Cody a follow. Give Adam a follow. At MattJustice13. At Tim Justice Utah. Yep, those are all good follows.
All right, guys.
Great Justice, all of it.
Great job today, guys. As always, halftime crew, hashtag Team Tackle.
About Twitter, T, especially regarding tackle or trading justice. It's a great way to stay on top of when we post things.
Oh, yeah.
Tackle's Twitter account is a great account. The Trade Justice account, I love because I love Mark's sarcasm. It's fantastic.
Well, not only that, if you want some live setups, that's where we're putting them.
Yeah.
Twitter. Coach Franks always get like, hey, this is setting up right now. Go look at it.
Mm-hmm.
Yep, love it.
Yep. You got to follow to see it.
All right. We're done.
Yep.
Podcast time. All right, guys. Peace out. We'll see you tomorrow night.